All right. Let's chew on it. Mohamed El-Erian, Allianz Chief Economic Advisor, Liz Peek, syndicated columnist, Fox News contributor, and our very own Gerri Willis, Fox Business correspondent. You've been very busy.
Yes.
You've been very busy. It was an even meltier melt-up, but it's still pretty strong. We have a chart. Look at the year-to-date on one of the indexes, probably the Dow Jones. It's basically been rising and rising and rising. What can you tell us?
I got to tell you, there are fundamentals at work here. Companies are making more money, and more money is flowing through to the bottom line. We talked about this yesterday. I have some fresh data. S&P 500 estimates for the year, double digits, 10.9%. Tech will be up 23.5% year over year. Financials, their earnings up 21.1% year over year. So, I mean, things are working. I mean, this is the thing that fuels the stock market, the mother's milk of the stock market.
Yes, profits. Profits are always the mother's milk of the stock market. But I think the trade vibe helps. I mean, I think the trip to Asia so far, I can't predict the Chinese part 100%, Liz. I don't know. I mean, I hear what Scott Besson is saying. I hope it's right. I don't know if they're breaking any new ground, but maybe they'll cover some old ground and so forth. But the vibe is good over there.
Yeah, well, I think what he's racked up so far in the way of trade agreements or understandings with Japan, Malaysia, Cambodia, just about everybody in the region is incredibly promising. Why? Because we have finally pivoted to Asia. How many years have we been talking about pivoting to Asia and trying to bolster our relationships in the region so as to confront China? That's what it's all about. So if China doesn't follow through on their trade deal, Larry, over time, it is less and less important to the United States. They have the rare earth piece of it, there's no question. But one of the things President Trump has been doing this past week, firming up new sources of rare earth imports from Australia, from Japan, who knew, but they turn out to have a gigantic reserve of rare earths, and from other sources. So we will solve this problem, which is what is so important about postponing that ban on exports from China. And then, honestly, all these countries are producing. The transshipment thing is very important, but they're also producing their own products. Companies in America are going to Vietnam and elsewhere because it's cheap to produce there. Great. Let's have new relationships.
With a moderate tariff, Mohamed, moderate. I mean, our tariff is going to be somewhere around 18, 19, 20%. The effective tariff rate, once things are adjusted, probably come in. It could be as low as 12. I'm calling it 15% for argument's sake. And the reason I say that is I think it's good because it's not going to crimp our profits too much. That's what I'm looking at it from a profit standpoint and a stock market standpoint. And I think the stock market knows that.
Oh, absolutely. The stock market has understood that in relative terms, we are much better off now than we were before. In absolute terms, we're going to raise about $300 billion for the budget. We're not going to get much of an inflation impact. And as you said at the open, we haven't seen retaliation. And that's been
Don't you think that's really important? I mean, that's like a big, I'm surprised. My friends at some conservative publications don't like to acknowledge that, but that's a big part of this.
Oh, it's huge.
I mean, I know trade deals are tough, like I've been part of that. But in fact, this has been sort of friendly. Asia, very important. They used to be our competitors. Looks like, as you said, we're surrounding China, number one. And number two, you know, they make a lot of stuff. As long as we don't have transshipments, but they make a lot of stuff, these little countries.
They do. And now we have a period where, as Liz says, we're going to get de-escalation. And it's critical that we use that period for two things. One is to reduce our own vulnerabilities to China. And two is to continue to reinforce this alliance that ensures that there are no ways for China to get around what it promises.
I want to save the China stuff, rest of it for Peter Schweitzer, who's a Chinese expert. But Gerri, the Fed meets tomorrow. Everyone in the world knows there's a quarter point coming. Right. Is that right? Does everyone in the world know that?
That's what everybody thinks.
It's not coming. It's not 50. It's a quarter.
I think people would love to see 50, but they think they're getting 25. That's what I see. And when I talk to these market strategists and interview them, they're looking not just at that, but they're also looking at 2026 and some very good news there. Coming out of the big, beautiful bill, they're seeing benefits to companies to the bottom line. Write-offs are going to be able to take. People are going to get a huge refund. That's going to fuel first quarter growth. So what we've set in motion in this fourth quarter here could definitely continue into the first half.
It could be a couple $100 billion. I mean, I've seen estimates, no one knows for sure, static, dynamic, et cetera. I've seen estimates ranging between $150 billion and $200 billion from the withholding rates.
Love that.
I mean, Scott Besson talked about it. He's still the IRS commissioner when I interviewed him on the show. And he reminded me of that. And so, you know, he should know whereof he speaks. But Liz, on the other hand, why UPS has now cut 48,000 from their payrolls? Amazon, 14,000, could go as high as 30,000. Microsoft, 9,000, 4,000. Salesforce, 1,800. Target. I mean, there's a lot of cost cutting going on in the private sector. Not the government, mind you, but the private sector.
Yeah, and I think people have been very wary, big companies have been very wary of announcing to the public that, hey, we have AI, we've invested billions of dollars. Guess what? We're cutting 30,000 people. I think they really have been very cautious about that. Amazon kind of broke that today or yesterday, whenever they made this announcement. They're not the first, but I think they've been the boldest to say, yeah, we are going to cut costs.
Is that the reason?
By laying off people.
It's AI?
I think without a doubt. I mean, think of all the things that Amazon's doing, giving drivers better guidance, making them more efficient. Guess what? You need fewer drivers, robots stacking the shelves, et cetera. Larry, I think this is probably the biggest topic we're not talking enough about. I think people are going to be, you know, kind of on edge when more layoffs come, and I think more layoffs are going to come.
Mohamed, how much, if we ever get a government reopening and we publish job numbers and so forth. Now, the ADP, the private surveys, I guess they're going to do weeklies and give it back, let the Federal Reserve see it. But this stuff will show up in the job numbers in the next few months, or is it already in the job numbers?
It's starting to show up, but there's a risk that it shows up in a bigger way. Why do I say a risk? I'm not against efficiencies. I'm not against cost cutting. And AI has an important labor displacement. You can have a leaner organization. However, the real power of AI is not in displacing labor, is in enabling labor. And companies, I think, have a responsibility not to go for the shortcut. Because if they go for the shortcut, two things are going to happen. One is there's going to be less support for the AI revolution, and we need that for all sorts of reasons. And the second is we're going to decouple growth from employment. And that's going to make the Fed's job really hard. So I'm really hoping that the companies don't fall for this simple thing of just displacing labor, but do the hard thing of enabling labor.
Does that mean the Fed has to cut more? This is a very interesting point.
It is an interesting point.
And I don't think anybody, just to editorialize, I don't think people have incorporated, I mean, these are pretty big numbers. I mean, we've had a downsizing of the federal payroll. A lot more may or may not be coming. I don't know how the shutdown's going to work. But the private sector stuff probably hasn't gotten, shall we say, equal time or enough time. And what does it mean for Fed monetary policy?
That is a great question. I'm not sure I'm prepared to answer that one.
Oh, go ahead.
But can I just say
Take
one
a stab
thing?
at it.
Well, you know, I talk about a lot of things, but I'm not an economist like
The answer is
yourself.
they're going to cut more. They're going to lower the rate more. And they probably should lower the rate more. Go ahead, Liz.
I just have to say one final thing.
Yeah.
AI, we have to keep using it because it's going to make a huge difference in healthcare. We're going to solve problems we didn't think were solvable. We're going to find the answer to cancer. We're close to it now. There's more to be done. We cannot say no.
Can AI, but over time, AI might create jobs.
I think that's true,
I mean,
actually.
that's the history of advanced technologies, Schumpeterian gales of creative disruption and all that.
Over time, I agree. But there is going to be a point in the next couple of years where AOC and Bernie Sanders are going to be stomping around the country saying, billionaires are getting richer, the people who own these stocks, the people who run these companies. But meanwhile, tens of thousands of people are losing their jobs because I don't think the jobs are being created fast enough in AI. And if you're a company and you're spending billions of dollars on AI, you have to show your shareholders it's delivering something. And what it's delivering now is, efficiencies, but also those efficiencies mean lower headcounts.
I mean, Chris Waller, Fed governor, is coming, I think he's coming on a show Friday. But I'm going to ask him about this. I don't think it's received enough attention. What will they do? It's funny, technological advances may not have much to do directly with monetary policy or the federal funds rate, but then again, the central bank is hyperactive. I mean, how do you see this story?
So
much lower target rate?
So what I would like to hear from the Fed, and we're not going to hear it tomorrow. Tomorrow we're going to get the 25 basis point cut, and we're not going to
prefer 50.
Yeah, I mean,
Yes.
you've heard,
No,
and we're not going to hear about future cuts that are going to stay on the fence, unfortunately. What we need to hear from the Fed is, do they embrace a productivity revolution that I think is ahead of us? Because if they don't embrace it quickly enough, we will have tighter than needed monetary policy.
So the break-even rate is going to be lower, and they should follow it down. I'm calling it the break-even rate because it's a lot of mumble jumbo. But the break-even rate is going to be lower, and the Fed has to be aware of that. They should start moving sooner, not later.
But they haven't yet bought into this. Neither have they fully bought into that the tariff effects are going to be once and for all, and they're not going to be inflationary. And these are two things we really need to hear from them. I don't think we'll hear much on the productivity side. We may hear something on the tariff side.
Yeah. I mean, Chris Waller's very big on that once and done on tariffs, by the way, which he's a good voice on that.
Standard economics. Anyway, we'll leave it there. Thank you. Appreciate it. You've had a long day. We appreciate you coming down.
Thank you.